Maryland is the only state in the country that charges both an inheritance tax and an estate tax. That sounds terrifying. For most families, it isn't, and I want to show you why in about 3 minutes. I am not a lawyer. I settled an estate myself, and the death taxes were the first thing I had to actually understand. So here is the plain English version for Maryland. Maryland's inheritance tax is a flat 10%, but it only applies to what Maryland calls collateral heirs: nieces, nephews, aunts, uncles, cousins, friends, people who are not close family. And here is the part that surprises people who have read about Pennsylvania. In Maryland, close family is exempt, all of it. For deaths on or after July 1st, 2000, the surviving spouse pays nothing. Children and other lineal descendants, nothing. The spouse of a child, nothing. Parents, grandparents, stepchildren, stepparents, nothing. And brothers and sisters, also exempt. In Pennsylvania, a sibling pays 12%. In Maryland, a sibling pays 0. Registered domestic partners are exempt for deaths on or after October 1st, 2023. Charities exempt under Section 501c3 pay nothing, and property administered as a small estate is exempt as well. So the same $100,000 splits two ways: to a child, a spouse, a parent, a grandchild, a sibling, or a stepchild. The Maryland inheritance tax is 0. To a niece, a nephew, a cousin, or a friend, it is a flat 10%, about $10,000. Now the second tax, the one that gives Maryland its reputation. The Maryland estate tax is completely separate. It is paid to the Comptroller of Maryland on Form MET1, and it is due 9 months after the date of death. But it only applies to estates above the exemption, and that exemption is $5 million for deaths in 2019 and later. Most families never come near it, and if inheritance tax was paid, that amount is credited against the estate tax, so the same dollars are not taxed twice. Here is the piece almost nobody explains correctly. The Maryland inheritance tax on probate property does not have a fixed due date after death. It is due when the property is actually distributed. You pay it alongside the administration account that the personal representative files with the Register of Wills. And yes, in Maryland, the executor is called the personal representative. Non-probate property works differently. There, the Register of Wills issues an invoice, and if it is not paid within 30 days, a 10% penalty plus interest applies. That 30-day window is the one that catches people. One honest caution: what I just gave you are the rates and the exemptions, not advice about your estate. Deductions, jointly held property, and how an asset is titled can all change the answer. Confirm your numbers with your county register of wills, the Comptroller of Maryland, or a CPA before you file. If you want to see what this looks like for a real number, there is a free Maryland inheritance tax page on our site with the full exemption list and the deadlines for the personal representative. No email needed. That is at executorpilot.com. One question at a time. You can do this.